Hi there, welcome back to ET Now. Very good afternoon. You're watching Market Fatafat with me, Kanishka Sarkar and Ankita Saxena. Over the next half an hour, we'll take you through all the top buzzers in trade today, either on the back of news flow or on the back of technicals. But before that, a quick look at how the markets are faring. Now, Ankita, it's an absolutely flat day coming in, especially for the Nifty and Sensex. They are both absolutely flat. Nifty at that 25,755 level. On the other hand, Sensex at that 83,960 odd level. It's actually Bank Nifty that is standing out. It's up nearly 380 points right now at that 58,150 odd level. Now, if you talk about some of the individual action, Maruti Suzuki, the top Nifty loser today, down about 3.5% after earnings and also data, which October sales data, which was pretty much in line. But Jefferies has downgraded the stock to hold, and hence the stock is taking a beating today. On the other hand, Shriram Finance soaring away in trade, more than 6% higher right now. Other than that, there's M&M, SBI, Apollo Hospitals all trading in the green as top Nifty gainers. Sectorally, the action is coming from Nifty Realty, PSU Bank and Pharma, which are holding on with gains, whereas Nifty IT and FMCG, they are the top laggards today. So yes, lots of individual stock action today, Ankita, but on the overall front, markets are absolutely flat.
Right, Kanishka, flat on the frontline index, but a lot of action coming in the broader end right now. Small and mid caps, they are trading up almost with gains of more than 0.5%. But let's talk about the stocks that are moving in trade. Sameet Chavan, who's the head of research, technical and derivatives, Angel One, who's now joining us on the technicals. And hi, Sameet, thank you so much for taking the time out and joining us. Let's get going with all the stocks that are in focus today. Let's talk about the first stock of the day. That's Shriram Finance. That's a top Nifty gainer. That's up and away almost 6% in trade on the back of strong set of results. So let's take a look at what the report card really looks like. For quarter 2 of FY26, the AUM stands at 2.8 lakh crores. That's an uptick of 15.7% on a year-on-year basis. The NIIs also saw an uptick of almost 10% on a year-on-year basis at 6,025 crores. The PAT was up 11% on a year-on-year basis at 2,307 crores. The company has also declared an interim dividend of 4.8 rupees per share. Now, according to management, the net interest margin is expected to be at 8.5% for quarter 4, and excess liquidity reduction happened late in September. The positive impact is not fully reflected in the quarter 2 numbers, but AUM growth is expected to increase by an additional 2% in the second half compared to the current 15.74% growth. Nuvama has come out with a note and they're maintaining a buy call, and they've hiked the target price to 870 from an earlier 710 rupees. They also feel that the immediate focus areas are lowering the COF, which will give the SFL the flexibility to retain customers even if their credit rating improves, and improving productivity is a big positive for the company. On the back of that, Shriram Finance is up and away 6% in trade.
That's right, that's Shriram Finance for you. But Sameet, let me come to you. You've picked out Lodha as your first stock for us. Tell us, what do you see on the charts? It's up nearly 3% in trade today, and over the past month or so, it has given a good 10% return. Do you think this kind of upward trajectory is going to continue for the stock?
Good afternoon. See, overall, if you see since morning, most of the realty stocks have been buzzing. And if you look at the Lodha developers, which has been laggard of late since last 3 months, the stock has done nothing. In fact, it was consolidating in a narrow range, and now with the massive surge in volumes and the kind of price action that we are witnessing, stock has managed to surpass its crucial resistance zone. And as we speak, it is now traversing above its 89-day exponential moving average as well, which is a positive sign. And looking at this breakout, will not be surprised to see the stock heading towards 1300 quite soon. So yes, overall the bias is trend positive for this counter, and it seems like the stock has come out of its long slumber phase. On the low side now, 1200 followed by 1170 would act as a very strong support.
So those are the levels to track for Lodha. But moving on, another stock that is in focus today is Zen Technologies. That's on the back of an order win. It has received an order worth 290 crore rupees from the Ministry of Defence. That's to upgrade anti-drone systems. Now, this contract is to be completed within a year's time. Now, these upgrades are based on operational feedback showcasing the agility of India-made systems. This order highlights advantages of indigenously designed, developed and manufactured solutions, including swift adaptation, enhanced security and operational control. The upgrades are a direct result of operational feedback from frontline missions, including Operation Sindoor. So this highlights the agility of India-made systems in adapting to emerging threats as a crucial factor in modern warfare. So yes, on the back of this new order win, Zentech is in focus today, trading more than 4% higher right now.
All right, moving on from Zentech to another counter that's doing very well for itself, and that is from the PSU banking name. Bank of Baroda, that's up in a way almost 4.5% in trade. In fact, that's really buoying the sentiment in the entire PSU basket. Strong set of results coming in as far as BOB is concerned. Let's take a look at the results then. As far as the quarter 2 performance is concerned, that was better than what the street was expecting. The PAT declined 8.2% on a year-on-year basis, but grew 5.9% on a sequential basis. Now, the year-on-year decline was largely due to the high base in quarter 2 of FY25, which had included a one-off recovery from the 2 of 9 billion rupees that had boosted other income. Now, sequentially, improvement in PAT was driven by stronger NII growth, an improvement in NIMs and a lower credit cost. Now, we do see, the NIM improvement of 5 basis points on a sequential basis to 2.9%, which is better than what the peer performance have been so far in comparison as far as the sequential basis is concerned or a month-on-month basis is concerned. The loan book also grew 11% on a year-on-year basis and 5.9% on a sequential basis, led by strong growth in the RAM segment. Nuvama is maintaining a buy call with a target price of 320 rupees. Bank of Baroda is up in a way almost 4.5% in trade today.
All right, so that's Bank of Baroda for you. But we also caught up with the management. Devdatta Sharan, who's the managing director and CEO of Bank of Baroda, says that he's expecting steady demand from infra and manufacturing segments after seeing a pickup in corporate credit growth. Now, let's listen into his rationale.
So our overall growth is almost 12% on the credit side, and that is mainly propelled by the growth in RAM. The retail, agri, and MSME almost at 16%. Retail continue to grow at a much faster pace of 17.5%. So that is one of the, what you can say, as a business objective we are pursuing to retailize more. At the same time, the corporate growth sequential is 8%. And typically we see the Q3 and Q4 is very productive for corporate loan growth. And my expectation is that for a full year will be somewhere in the range of 10 to 11%. Looking into sector-specific demand, I think the demand is across because since we have been into a busy season quarter, so we are finding demand across in terms of enhanced working capital requirement. Some of the sectors like renewable, data centers, commercial real estate, there are demand over there. In terms of the infra, road is always there. A couple of core sector also, we have a couple of proposals therein. We have a strong pipeline of almost 65,000 crore. Out of that, 40,000 crore is already sanctioned, not disbursed. So in that scenario, I think there is a good pipeline, strong demand, and expecting a corporate loan growth of almost 10 to 11% for the full year.
All right, moving on to the next counter. Sameet, you've picked out BPCL for us. That's up in a way almost 3% in trade. In fact, it's again an earnings candidate. A strong set of numbers coming in. PAT is up almost 169% on a year-on-year basis for BPCL. But on the charts, what do you see? What are the levels that we need to watch out for? It is hovering around its 52-week high as well. See,
the entire OMC space seems to have found its mojo back, and in last 5 odd months, we have seen stellar move in this entire space. And BPCL, which has been a rank out performer within this space, has managed to surpass its 52-day high as well. So if you look at the overall movement, yes, stock prices have been surging, and the overall bias remains on the positive side. Any decline would be a good buying opportunity. As far as levels are concerned, previous resistance levels of 350 should now act as a very strong support, and any decline towards those important levels should be used as a buying opportunity. And if you look at the overall volume activity, it has picked up substantially, so that provides some sort of credence to the move. With a slightly positional view, we expect the stock to first challenge its all-time highs of 376 and then probably head towards 400.
All right, so those are the levels too.
Welcome back, you're tuned into Market Fatafat, and before we get you all the buzzers, let's take you through an ET Now exclusive then. The NHAI is aiming to raise over 30,000 crore rupees via asset monetization in FY26. My colleague Sameet Chavan is now joining us with more details of that story. Take it away.
The National Highways Authority of India, NHAI, is looking to raise more than 30,000 crore through the asset monetization for this financial year. Internally, they are aiming to raise roughly around 35 to 40,000 crore. And the model that they are looking at is InvIT and TOT model. The breakup that NHAI understand is that roughly around 15,000 crore could be raised through TOT, toll operator transfer route. 15,000 crore could be raised through the InvIT route, infrastructure investment trust route, whereas the rest could be raised through the project-based financing. And for the same, NHI is also looking to offer one small size road project, one medium size and one large size road project each quarter. The small size project could be to the tune of rupees 2,000 crore. The medium size could be of to the tune of rupees 5,000 crore, whereas the large size could be of more than rupees 9,000 crore. And why NHI is so confident? Because recently one of the major infra player, IRB Infra, has won a bid of one of the road project in Uttar Pradesh, which is based on a TOT model, toll operator transfer model, and this project was of around rupees 9,200 crore. Length was of around 350 kilometers. So based on which NHI understand that now the interest from the private player, they are looking to come and invest, and this will help to raise the quantum through the asset monetization. The central government has set a target to raise 15 lakh crore through asset monetization, and of which the highway sector is looking to raise roughly around 4 lakh crore through the asset monetization. That's a long-term project, but for this financial year, NHI is targeting to raise roughly around 35 to 40,000 crore.
And thank you, Sameet, for getting us that latest update from NHAI. But moving on, another stock that is in focus today is LIC. It's up about 2% right now. This, as sources have told ET now, that the government's planned stake sale in LIC is likely to be slightly delayed given the current market conditions. Now, DIPAM is expected to hold off on the stake sale until LIC's stock price improves and stabilizes around or above the IPO level, that's between 902 to 949 rupees per share. Roadshows for the stake sale, they are expected to begin in November, but the actual offer for sale, that could now take place in January of 2026. In fact, the government is looking to offload a 2 to 2.5% stake in this round. Now, remember, it had earlier sold 3.5% stake in May 2022 IPO as per the SEBI norms, and it now needs to dilute another 6.5% by May 2027. The government plans to complete this dilution in tranches, but sources say that the recent investment-related controversies have also weighed on the LIC stock. So yes, that's the latest that we are picking up, and hence the stock is up more than 2% right now.
All right, moving on from LIC to another one that's performing really well today, and that's Prestige Estates. Sameet, you've picked out Prestige for us on the charts. That's up in a way more than 2.5%. In fact, this is one counter that has clearly been an outperformer, whether it's, if you look at the 1 month chart, that's up 17%. Even in the last 6 months, it has given some great outperformance of almost 30% returns. So on the charts now, what are you penciling in? Is there more upside left to this counter?
In fact, this particular stock is on the verge of a breakout, and as you rightly pointed out, this has been one of the outperforming stocks within the realty space as well. Unlike Lodha, this stock has already started its journey 3-4 months back. Recently, we saw some consolidation, and again this upward bias has resumed. In fact, as we speak, this stock is now challenging its recent highs of say 1800, 1810. And looking at the overall, price and volume action, we will not be surprised to see this, breakout happening in a day or two. The next projected target for this particular stock would be around the 1920, and then probably this, with a slightly broader view, this stock can head towards 2000 as well. Overall, now, on the lower side, 1700 followed by 1650, 1600 would act as a very strong support, and any decline, toward those important supports should be used as a buying opportunity.
All right, then moving on to the next buzzer today, that's Titan. It's expected to report a very strong quarter, now driven by broad-based growth across segments. Now, analysts are expecting revenue to rise about 13% on a year-on-year basis, whereas EBITDA, that could surge nearly 49%, whereas PAT, that could see a growth of about 51% on a year-on-year basis, partly due to a low base last year, which was impacted by a one-time inventory adjustment. Now, adjusting for that, profit growth is seen at around 14.5% on a year-on-year basis. The jewelry division will remain the star performer yet again, likely growing at 19% on a year-on-year basis, with studded jewelry outpacing plain gold. Tanishq, Mia, Zoya and CaratLane, they're all expected to post double-digit growth. Some of the key things we need to watch as far as the results are concerned, it's the management commentary on festive demand, gold and diamond price trends and the margin outlook amid rising competition. So overall, another glittering quarter is what we are expecting from Titan, and hence the stock is in focus today, though not reacting as much, still trading at the highest point of the day, up about 0.2% right now.
All right, so that's the story with Titan, but counter that has already reported its number and it's doing very well is BEL. Now let's look at the numbers for BEL. It is a beat that's coming in on all accounts. If you look at the revenue, that's up 25.8% on a year-on-year basis. The profit is also up 17.8% and the EBITDA is also up 22% for BEL. It has succumbed to selling pressure, though it has given up all the morning gains right now, is right now really under pressure of almost 1%. But let's look at the guidance that the management has given. It's a revenue growth of overall 15%, EBITDA margin around 27%, and the order inflow, they're confident of exceeding the 27,000 crores, including the QRSAM order that the management has been talking about. And if you look at the con-call highlights, they see that their order win now stands at 75,600 crores. The product mix remains similar to the first half, and second half will also remain similar. They also feel that BEL is now an avionics protection agency for the LCA Mk1 aircraft, and Nuvama has also come out with a positive note where they're maintaining a buy call with a target price of 520 rupees on BEL. On the back of that, BEL is in focus.
That's right. Strong set of numbers coming from BEL, but some selling pressure also we are seeing on the stock today. But moving on to the next counter, Sameet, you have picked out BSC for us. It's it has gone up more than 20% in the last 1 month. So what kind of trajectory are you seeing for BSC on the charts today?
Importantly, if you look at the monthly time frame chart, stock seems to have found strong support around its previous multi-year breakout points of 2000. From there, we have seen a good gradual up move in this counter, and recently stock consolidated within a range of say 2500 on the higher side, 2350 on the lower side, and today we are seeing a decisive breakout happening from this important cluster, which technically confirms a bullish flag pattern as well, and hence if we have to take another couple of weeks view, this stock would gradually head towards 2650 first and then probably towards 2670. Overall, if you see 2400, 2350 should now act as a very strong support.
All right, that was the last talk of the day. Sameet, thank you so much.